Welcome, dear traders. Today is the 28th of Jan 2024. It's 8:23. Markets will open in around 2.5 hours. It's time for the MK Web summary of the last week. This time let's get started with silver, because I just spotted a nice example to explain something. So, as you see on the 19th of Jan, I wrote silver has an inner range MTS, but also dumb money longies. So remember, this is where you need to really understand the market causality as a whole, because the market is full of dumb money longies, okay, old and new dumb money longies. Overall, you see clearly how in the market we have way more longies than shorties. You see it with this net dumb money indicator and also the other one. So it makes no sense for the smart money algos to take this MTS if that means that those longies here are led into profit. Okay? So that would only be the case if the dumb money tolerance would be high enough. Here the dumb money tolerance is not high enough. So there is no reason for the smart money algos to let those long positions of the dumb money get into profit just to take the MTS. They can always take the MTS later. Okay? Here you see it also clearly on the 4-hour chart. So instead, they go down against those longies. They clear the low, okay, and take all those stops, all right? Boom. Like you see in the 22nd, okay? They take the short-term stops. More longies try to buy thinking they can enter cheaply. So, you know, they're going for the kill, okay? So in those situations, remember, you need to be able to see that, and you need to trade accordingly, okay? And if you're not sure, skip the trade, but do not just trade towards an MTS if you see that you are on the dumb money side, all right? This is not new information. Anyways, so what happened then is at some point they, as I said, went for the MTS. So after they cleared the low, okay, you see that we have some longies getting kicked out. So they completed the target. They did a little move towards the low again, and then boom, they fill all the order gap zones and the MTS. Okay, in the still on the 24th, you see. So here we have also the 4-hour reversal energy taking over, plus the inner range target. Okay, so when it comes to timing, you need to understand the difference between those 2 days. Let's go back again to the 22nd and then also to the 19th. Okay, here it's clearly more important for the algos to clear the dumb money longies. Okay, that's what they're doing on the 22nd. Boom, and then later, after this has been completed on the 24th. Okay, once the longies have been served and a bit of shorties came in, okay, then they're going for the upper target. So while this may be a little bit more advanced, it shows you the factors which are important and how the algos prioritize clearing out the dumb money, which is in the way of the actual target. Okay, so you could also call this move the pre-main run counter move, okay? The move away from the target to clear everyone out who was positioned correctly, and then they go for the actual target run, okay? These are also situations where people were positioned correctly, but they get stopped out just for the price to see returning to the actual idea, which everybody knows who has been trading naked charts, okay? Nice. All right, anyways, so let's go back to our summary. So euro dollar, you remember it was sideways for a while. It filled some of the option strike targets. Then it has this MTS below the price on the 22nd. Boom, and they took it the same day. Okay, so nice short trade towards the MTS within this consolidation. Nice little trade there. And overall, you see how some longies came in, even though the market is not really in a high buy situation. So, but at least they clear the 200-day moving average against those dumb money longies, because they tend to place the stops just below that. Okay, so it's not a big effort for the algos to clear that target. The same like we just saw how they took, for example, the low in euro dollar. They just took the day chart moving average. And guess what happens here? Similar to the other example. After they cleared the low, then they go for the MTS run. Okay, so if you caught this trade early enough, nice long trade towards the target. Okay, note how the market is empty. So in this situation you get a cheap entry towards the target. Okay, so again I would call this like a you could call this either like a pre-run counter move. So once some shorties came in and the target has been cleared, the stops have been cleared, you buy towards the inner range. Okay, not very advanced actually. Anyways, so pound dollar, they took the upper MTS exactly to the pip. Some longies came in, so they got down against the longies. And then, you know, remained in a low buy situation. So there we couldn't place a trade because, as you can see, the market went sideways. The market is empty. We have a changing the money flow from longy to shorty, from shorty to longy. Dumb money positions on both sides. So they kissed the moving averages, but you know, this is not a market mode where we want to place big trades, obviously. Yeah. Now, allow me to say that advanced traders, they may have traded the post-stop concept up here. Okay, so the target has been cleared, the price loses momentum, longies come in, so they trade down. Okay, and scalp down. All right, it's possible. This is an advanced setup. This is not for beginners. Okay, because for doing this you need to make sure that you're not in a market mode where there are too many shorties, so that you know the price ends up overshooting the actual target. So that's a pretty clear post-stop hunt trade for advanced traders. But as you can see overall, you need to be selective. You need to understand exactly what kind of market mode we have in front of us and whether you should place a trade or not. This is objective information. This is not subjective. Okay, and you need to also understand your own level, your own consciousness level within that. So do you have enough experience to take a post-stop hunt trade or not? Yeah. Euro pound, nothing special. So they had an MTS here and was very low bias, went sideways, then had this MTS above the price. So as you can see, like we had the situation where we had longies in the market and then the market went down, down, down. So right now you see there's some kind of squeeze developing again. So those lows, you know, can be targeted on that. But you see, like on the shorter time frames, I didn't place a trade in euro pound this week because, you know, like I wasn't at the desk when the squeeze emerged. Australian dollar. So remember we had this beautiful move with the option strike targets. Then we had an MTS below the price. They took this MTS. Okay. So first OST is filled, boom. Then the lower MTS filled. Nice in a range trade, similar to the one euro dollar. Look at that position again for advanced traders. Okay, they may have bought a post stop on trade. Okay, so target has been cleared, price lose momentum. Some shorties come in, so they buy away from the stop hunt. Okay, again, that's for advanced traders, not for beginners. But then later the week, you know, the same like in the other markets, we had Aussie dollar being quite low bias, going sideways within the middle of the 4-hour range, with the market being rather empty. So there were no interesting trades after that, and it stayed range bound. Okay. Kiwi dollar, surprise, similar thing. So they went down, cleared the moving average, then had also OSTs, took some of those OSTs. There was a nice reversal trade there. Filled the option strike target, then also like Aussie dollar had an MTS below the price, took this one. As you know, often I prefer trading Aussie dollar to Kiwi. Sometimes it's the other way around, but in the last weeks you see often Aussie dollar has a clearer picture, so there's no real reason to also do the same trade in Kiwi. Okay, you can do that, but remember, in your risk policy you should see that as one trade. Okay, anyway, so this was one of the better ones. So remember, we had the beautiful OST reversals in dollar cut. So this continued the week, so it also filled the last OST. Look at this beautiful move. And look also how these things unfold over days, okay? If I predict these things, sometimes they unfold over days. But still, you see, like, eventually the smart money got there. It's not in a rush, okay? It filled all the option strike targets, boom. And exactly when it took that one, did the pullback to the MTS, okay? So you need to understand these things in order to trade them. Not difficult. These are easy setups, okay? And also after the target has been cleared and shorties come in to trade towards an inner range MTS, that's an easy trade, okay? You can place your own stop look like down here, okay, below the low and below the order gap zone, like here, and you get roughly 1-to-1 risk return for this simple trade, okay? May not be worth a lot, but you're even trading on the right side. So these are trades you need to be able to do, okay? Then we had an MTS below the price, as I wrote, and inner range movements. Zack, this one got taken. So another nice short scalp there, okay? And overall, you see the market moves around the moving average on the day chart. So nice, two nice scalps. Okay, here, this is a nice prediction I'm proud of. I said already on the 19th last week, dollar yen could develop into a for reversal move down because we had some longies coming in. So boom, here we got the nice move, okay? So those option strike targets got filled and we had the down move. That was juicy. Then it did a pullback and then, you know, came back down towards the next option strike targets. If you are fast here or you're awake in the Asian session, you can of course do a second trade short. You had the MTS on the way and the new option strike targets and order gap zones on the way as well to trade this overall for our reversal in the yen pairs, which I had clearly predicted, okay? Show me another trader who does that. So that was nice stuff. Later then, at the end of the week, they took the upper MTS and order gap zone with a pullback, as you can see, so then it kind of leveled out. But this predicted move down was beautiful. Of course, the other yen pairs did a similar thing. So here with option strike target. So as you can see, pound yen can still come down. Shorties start to leave with an option strike target on the 1 hour chart, so an MTS. So if some longies come in, it can come down next week, okay? And if the shorties continue leaving the market. So this week it kind of went sideways towards the end of the week. So let's see what happens. If shorties leave and the longies come in, we could have a nice reversal move down. At the moment, we still have too many shorties in the way. You see, we don't have a downward sloping squeeze line, as you can see in the day chart. We still have some short positions below the price. So if they maybe go sideways or test the high and shorties leave or longies try to buy a breakout, then we would have a down move. This needs to happen first, okay? It looks a bit early right now. Euro yen, similar thing. Boom, there we have the nice reversal. Also the OST runs, the same thing. Was probably the better choice. Also MTS pullback. Euro Aussie, remember what the beautiful OST trades last week, which were very juicy. They went down and then took MTS. Also nice trading opportunities there. And look how beautiful, yeah? I mean, in the end, boom, 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 all of those OSTs got filled. So you have a lot of time to detect the situation and trade, okay? Hours sometimes. Hours and hours, all right? So most of those moves, they don't go very fast. I mean, you have to understand that. Bang, there we go, right? This is leading info. You know here already that this is relevant, and later it comes. Plenty of time, all right? Pound Aussie, you remember that we also had the OSTs, yeah, I mean, it took the MTS in a range, bam, bam. And gold, yeah, so took the lower MTS, took the upper MTS with precision, then came off. Overall, you see the market was, however, empty. Okay, neither longies or shorties dominating. It went sideways. I didn't place a trade there this week, and silver, as discussed, was the better choice. Okay, let's finish this off with Bitcoin. So it went all the way down as predicted to the lower MTS. Okay, again, look how many days that took. This is a 22nd, this is boom. Then finally took it in the evening, okay? Again, it takes a long time for the things to unfold. And guess what? Doing exactly a pullback from this target run. How cool is this, okay? And now, if not too many longies on the way, can even take also the next MTS. So yeah, I would say this week was medium difficulty. As you can see, some good trades. Some more advanced ones as well. But yeah, remember, okay, you need to have that mindset of being selective. You have to have the discipline to wait. Once you recognize the situation, okay, then concentrate on the execution, see what makes sense in terms of the entry. Do you enter at market or maybe even at limit? That's another thing people should also incorporate. Sometimes it makes sense to enter via a limit. Okay, you may get a better price. And if the market doesn't go to your level, you know, this trade is just skipped. Okay, like let's say you even want to trade like a move like this. Okay, you know, like always consider the causality in terms of limits. You may have placed maybe a limit around the MTS because you know that once it gets filled, it will continue the original move. Yeah. That you should add that to your repertoire, not only at market but also limit. Because think about it, what's the likelihood that in that moment when you check the screen that is the best point of entry in terms of the time? Not very high. Sometimes it makes sense to actually wait, and of course it again takes discipline because using limits could imply that you also miss trades. You can also combine both, trade some at market, some via limits. There are many ways to play the game, all right? And you need to also find your own way which works best for you. What doesn't change is the causality. It doesn't care what you do, okay? Whether you trade with limits or via market or whatever. The market causality will unfold regardless. Understand? It's like a river which is flowing in front of you. It will flow either way, no matter what you do, okay? But you have a choice. Will you take your boat and cross the river now or in 2 hours? Yes? Or will you actually just jump in and try to swim over? What an analogy. All right, anyways, I wish you a beautiful Sunday evening and a fantastic trading week next week. Take care. All the best.